All right, as you'll see, I just recorded a 15-minute video and it did not save, but I'll do it again. So here we go. So Palantir just reported Q1 results and the stock is down big, down below $8, around the $8 range heading into the conference call. And there are a few reasons for it. Let's go over. So we saw revenue come in at 446 million. Expectations were 443 million. And the adjusted EBITDA was ahead of expectations, but they did lower the Q2 expectations to 470 million. We'll see that the commercial growth was great, but total revenue only came in at 31% year over year, which is a little bit of a letdown. And then US commercial led that. Government was only 16%, a bit of an issue contributing to the 31% growth. Commercial customer count 86%. Operations were doing better than last year. And then the adjusted income from operations of a 26% margin, not too bad there. And then we just saw the GAAP net loss of 5 cents, which is not the greatest. An adjusted loss per share of 2 cents, which is below expectations of 4 cents. They're expecting 470 million for Q2, a bit of a letdown. We'll see that Palantir has always tried to exceed that 30% growth rate, but with this guidance they're giving, it'll be closer to 25% growth, nowhere near the 30 or 35 or 40 we would be hoping for. It does look like the operating expenses are under control compared to revenue, which is a good sign, but once again, that revenue is coming down. And so here were my expectations versus what they actually delivered. Overestimating revenue, but successfully forecasted R&D, and the other operating expenses came in under what I was expecting. So we actually saw some operating income better than what I was forecasting for, and the net income looked better than what I was forecasting for as well. So if we take that out, we can come down and look. The linear line, it looks like Palantir has underperformed this linear line that we've seen over time here. Operating expenses under control, which is a good sign, and operating income is really starting to improve. Still a loss, of course, due to stock-based compensation, and net income much better than what I was expecting. But once again, the revenue growth, gross profit, still a bit of a letdown.